Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update. And I really want to start things off by just reiterating my stance on everything. And that is that I don't think this is the bottom for the cryptocurrency market. And I'm finding it rather nauseating, rather annoying how the majority of crypto Twitter and YouTube really seem to call every single leg that we have down, and then when we have a buyback of that down pressure, or we have some sort of a relief of that, they keep calling bottoms. And for me, it really shows a huge lack of understanding of the environment that we're in financially. Markets are very much driven on liquidity, and for you to call a bottom here when liquidity, certainly for the US and other governments around the world are following, central banks around the world are following, is getting absolutely sucked out of the system and becoming scarcer and scarcer. So there is no reason for me to suggest, until we see pivotal changes, they could be geopolitical, they could be central bank orientated, but whilst the Fed is on the regime that they are currently on, it gets worse for markets. I want to make that point very plain and simple. Now, that doesn't mean that given how much of a down leg we've seen, we don't see some sort of relief rally. You know, when I look at Ethereum here, we picked off a couple of longs over the past couple of days on Ethereum, did very well. This is not where I'm shorting Ethereum, given how much of a down leg it's seen. We've spoken about how there is definitely the scope for a relief rally here for the likes of the cryptocurrency market. The issue you've got is, what does that relief come in the form of? A bear flag, a rising wedge? Does it come in sort of a ledge structure where we just go sideways before then selling off lower? But to call bottoms, and one of the most annoying things is when I see people bring up the DXY and literally they draw charts and what we'll do where they're basically just saying, look, this is what's going to happen with the DXY. Well, why is that going to happen? It shows a huge lack of understanding in regards to what's actually happening financially. Like I say, markets are driven from liquidity, and liquidity is getting literally extracted at a unprecedented rate for probably most of our lifetimes in regards to the Federal Reserve. You know, if you look at interest rate hikes, the last time they did a 75 basis interest rate hike was in 1994, and the IMF had to bail out Mexico. Yeah, this is not accommodating. The conditions are not accommodating for markets, and failing to understand that and calling a bottom at every single point is just annoying for me. And, you know, shows a huge lack of understanding. And this is what I'm really trying to do on these daily cryptocurrency market videos, is give you a general view of where the cryptocurrency space is. We are going to get into some of the news. Isn't it interesting how we have the first short Bitcoin ETF to list on the New York Stock Exchange? So we don't actually have a spot Bitcoin ETF, but they've facilitated a product that will essentially allow you to short. We're going to get into a number of other things, like we've seen huge outflows, the biggest outflows ever for a purpose Bitcoin ETF. I think this is from CoinShares, and we're going to get into a number of sort of traditional market headlines, if you will. But really, I just want to focus on this point that, you know, it's still a very risk-off environment, and for people to just expect the cryptocurrency market to just go off on a huge raging bull run when the conditions are very much stacked against you. And this is something that we've been highlighting. You know, Bitcoin has never, since 2008, has never had to deal with an environment like the one that we're moving into. And it's going to be very interesting from somebody who loves the cryptocurrency market and really believes in it to see how it fares. And to be calling bottoms here, as in a macro bottom for the cryptocurrency market in regards to its cycle that it's currently in, I think is extremely foolish. For me, it's more important to look at data as it reveals itself and base a strategy accordingly. And again, people just look at interest rate hikes. They're not looking at what the Fed's doing with their balance sheet. You know, it's essentially like having a triple liquidity extraction on a scale that probably a lot of us haven't seen in our lifetime, certainly if you're 30 years and under, you know, which is certainly interesting. So we're still not calling this a bottom. Does that mean I want to short here? Absolutely not. And in actual fact, you know, we are taking longs and looking for that upside relief rally. We said the NASDAQ could provide that. You know, you could get a close of this gap here, see a bit of a pushback. You always tend to, in a recession looming market, do react around your 200 weekly moving average. So there is the scope for more upside. But the key thing is, what does that upside present itself as? You know, does that upside present itself as some sort of a bear flag? Does it present itself as some sort of a bull flag? You know, we've seen previously, you've had this over here, and you had this big structure, which is where we were essentially warning people and deleveraging from the cryptocurrency market. You know, do we then get some sort of a repeat of this? And you're very much kind of ranging. You could call this a deviation. You're now back above, and you could end up in another range-bound environment only to sell to the downside. And that's kind of what I'm expecting, you know, downside across the board. And I think the more and more I gain knowledge on the kind of macro environment, something that I'm paying extreme attention to. I'm listening to things every day on it, listening to plenty of different speakers talk about it, reading books on it. I told you we were reading Paul Volcker's autobiography for what it's worth. You know, it's a very unaccommodating time for markets across the board. That being said, you can still have some pretty harsh relief rallies. You know, often the harshest relief rallies do occur in a downtrend. So just be very careful out there. Be careful of bottom callers. Certainly be careful of these people that are calling for the dollar to like collapse here and that it's in a bubble. Inherently, when you up interest rates, the demand for dollars goes through the roof because you need more dollars to pay back the payments that you once sort of agreed on. You know, and they don't understand that. And it gets worse because interest rates get higher and they're set to sort of get at least to 3+% by the end of the year in terms of the Fed fund rate. So the demand for dollar doesn't slow down here, guys. You know, it continues to thrive, and that's unaccommodating for the crypto market. Again, we could see some sort of relief, but ultimately it's killed off. Let's get into a bit of the news. Like I say, the crypto market is seeing a little bit of relief today, which is nice. And for those people that think I'm a bear, I'm not a bear at all. You know, I think crypto is going to be the biggest performer in terms of ROI as an asset class that you know, in the next 10, 15, 20 years. I really do believe in this as a technological revolution. I'm just saying what I'm seeing, you know, that it's a very unaccommodating environment for markets that we're currently in. Let's get into a little bit of the news. First short Bitcoin ETF to list on the New York Stock Exchange. The exchange traded fund will allow investors to hedge their Bitcoin exposure, which may prove particularly pertinent given the sharp downturn in the cryptocurrency market as of late. Again, when they're talking about sharp downturn, I don't think we've seen the worst of it. And we've looked at the NASDAQ. I see a lot of downside for the stock market, certainly the US stock market and the indexes that they provide, because they're extremely overvalued still today and have essentially just gone up since 2008. Talking about Bitcoin, that's the environment that it's been in. We haven't seen any kind of a colossal move down, barring March 2020, which was really a capitulation news-driven event or situation event. We haven't seen how crypto is going to react moving forward. So I think a cautionary tale is one that's really going to benefit you. More forced selling ahead. Purpose Bitcoin ETF holdings plunge by 51% in biggest outflows ever. So we're seeing, you know, when you're talking about a Bitcoin purpose ETF, it's largely going to be sort of institutional players that are going to use this and big players. And you've seen a huge outflow here, which suggests that they're taking the risk off the table, probably given the macro situation, which has been apparent for a long time, but is now becoming really relevant, I guess. And, you know, this is, you know, this was a good article that I'll leave a link to in the description. Stock market historically don't bottom out until the Fed eases. So this is what we're watching. You know, this is our thesis really moving forwards, is that it has a lot to do with the Fed. How markets do over the coming months has everything to do with the Fed Reserve and the liquidity that they are providing or are not providing. Think about why they're upping interest rates. It's essentially to kill off demand. And, you know, that echoes through to the cryptocurrency market, whether that be institutional demand or whether that be, you know, consumer demand, because consumers are now having to deal with extremely high inflation and their debt payments going through the roof. And this is a very true one. And like I say, you know, we're really waiting for that Fed pivot before we pivot bullish, because whilst we are, and this is the thing, we're you know, the Fed are looking to get to 3+ % in the Fed funds rate by the end of the year. We're nowhere near that yet. You know, we've got another half and a bit to go. That's just the fund rate, let alone reducing the balance sheet. This all factors into markets. Sounds doom and gloom, but there's amazing opportunities presenting themselves in front of us. You know, we're looking at lots of altcoins. We're looking at lots of different cryptos and saying, look, the cheaper we can get these, the better, because they're going to do very well over the long term. And they've, you know, shown us in terms of people pouring money into them that they're still very relevant. Dow futures surge nearly 400 points as the market's set to rebound from a brutal week. So it's been brutal. Again, you can definitely see the scope for more upside. The issue with crypto right now is there's so many catalysts that could bring downside that you've got to be really, really cautious. And if we do get a rally in the stock market, you can see the S&P futures has opened up quite well. You know, once that kind of comes to an end, I think that downside continuation happens. And there is, again, a lot of room for the likes of crypto and the equity market rallying, given just how much sell pressure we've seen, given the fact that we're seeing the dollar take a break. We're also seeing the likes of nat gas and oil. I mean, nat gas came right down. So this is all going to filter through into the CPI that we're going to get in the coming months. We've also got something here saying labour market worse than the 1970s as strikes hit UK. Nobel Prize winner economist says. So we're currently having, I think, railway strikes at the moment in the UK. This is the thing, you know, the Fed talking about the labour market and using it as kind of a reason that allows them to up interest rates and to move into this, as they're saying, essentially the economy's strong according to the labour market. If you actually pick it apart, the labour market isn't really that strong at all. Not for the US or the UK. So I don't see that a recession is avoidable unless the Fed literally over the coming months decide that they want to aggressively pivot. But then you're going to have the issue of continuously high inflation. That, you know, there are certain things that they could do, but it's kind of outside the Federal Reserve's operation. So for example, Biden could come along and start lifting up sanctions. This would ease inflation, but it doesn't seem like that's very much what they're going to do. And that doesn't have to just be Russian sanctions. That could be the likes of, you know, some of the Chinese sanctions. You know, this is all stuff that we're paying attention to as we're trying to give you guys a good general view of the cryptocurrency market, where it's going and maybe what to expect moving forwards. Of course, we can be wrong, but I do think that I'm seeing lots of just garbage thrown around, you know, bottom callers. They've called bottoms on every single rest that we've had and been wrong today. Eventually they'll be right, but the issue is that what they've really highlighted is that they have no concept of what is really taking place right now, and it's not a accommodating time for markets at all. Crypto no longer dances to its own tune. We've seen that be very much the case, and the correlation become very much apparent with the traditional market. And whilst we see more downside for that, you know, we're going to apply that to the cryptocurrency space. That is all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.